How's it going, everyone? Welcome to Investment for Beginners. My name is Andy and thank you for checking out this channel about basic introduction for investment. If you're new to investing or just curious about investment, I'll link the playlist below so you can check it out. If you found any of my videos useful or insightful, consider sharing it with your friends or family so we can all achieve better retirement and financial freedom. After all, we all want to have more time to spend with our families and friends or just to ourselves and have enough money so we don't have to go back to work after we retire. In this episode, I'm doing an end of the year report on my portfolio. The reason why I waited a few days after New Year is because it takes about 4 days for the previous month's number to be updated into the performance tab, which is this right here. And I wanted to show the December performance to you guys. I'm gonna go over how much my portfolio made from the growth and how much I made in dividend. I'll also go over my serious investment stocks, how they did this year. Some of the stocks were purchased sometime in the middle of the year, so they'll be calculated from the date they were bought. So starting off this year, I started with $23,958. But with $6,000 contribution from the beginning of the year in January, that totaled to $29,958. By end of the year, that balance has increased to $44,327. The total amount my portfolio gained is $14,368. That's about a 48% capital gain this year, which is my second highest percentage gain in single year. The first year I started investing, my capital gain was, I believe, around 58%, which is my number one highest gain in single year. From the $14,368, about $1,326 is dividend paid, meaning that my stock had gained total of $13,042. So looking at these numbers, my dividend makes up about 10% of the total capital gain. When I average the dividend of the year, I got paid roughly around $110.56. That's not a lot if you consider I'm getting paid only $110 in a month, but this amount will go up when I do end of the year report next year because all my dividend paying stock has at least good record of consistent paying the dividend, but also increasing the dividend pay. Just to remind you, this is all free money. Also, with $6,000 contribution from this year, 2020, I will use that toward buying another stocks that will pay dividends. So that will also increase the amount that I will earn at the end of the year. I personally do not reinvest the dividend money back into buying more shares from the company that pays me because right now my plan is to use that dividend money and buy other company that pays dividend. So why am I doing this then? Because for now, my plan is to increase the diversity in my portfolio. So checking my individual stock, we'll start off with the Microsoft. So Microsoft was purchased before 2019, as you can see from here. They were bought 2017 and 2018. So what we're gonna do is we're gonna go and see the entire full chart. Okay. So in January 4th of 2019, the Microsoft closed at $101.93. And as of today, they are at $158.62. And if you look at the 52-week performance, they are up 62% or almost 63%. So anyone who bought Microsoft 1 year from today, you'll be up 63%. Next is Toronto Dominion. I bought this investment back in April 1st of 2019, so we're just going to use what we have over here in this chart. At the time of buying this stock, it was $55.37, and right now it is currently sitting at $56.49, an increase of only 2% in 8-month period. So 2% is extremely low, but one of the main reasons why I hold on to the Toronto Dominion is because they pay great dividend. Not only do they pay great dividend, but they pay consistently and raise in their dividend pay every single year based on their 10-year dividend pay history. So what we're gonna do is check their dividend history record. So as you can see from here, starting from 2010, their dividend has been slowly going up, and they have been paying on every single quarter. And right now they are paying at $74 per share. But because this is Canadian stock, when I actually check how much I got paid, it was around roughly $56. Third, we have Wells Fargo. As you can see, I bought Wells Fargo in 3 different times in July, December, and beginning of this year. And when I average this out, or when the computer does it for me, it comes out to be $50.29. And currently, the Wells Fargo is sitting on $53.42, an increase of little over 6%. It's better than Toronto Dominion, but still a single-digit percentage gain. However, Wells Fargo also paid nice dividends of 51 cents per share, and just like the Toronto Dominion, they pay consistently and increase their dividend pay every single year. Fourth, we have AMD. This was purchased before 2019, so we'll go to see their full chart. So starting January 4th of 2019, they closed at $19, which means I am down $6 because when I bought this in 2018, the price of this was $25.28. But 1 year after January 4th of 2019, we're sitting at $48.60. So fortunately for me, I recovered that negative 6% and much more. Anyone who had bought AMD 1 year from today at the price of $19, they would have total gain of 185%. Next is CVR Energy. This was purchased in the beginning of 2019 at $34.83 and currently closed at $40.38. So looking at this chart, which is their 10-year history, they haven't really grown, but what makes up for that is their dividend, which is currently paying at 80 cents per share. Their dividend history has consistent pay, but the amount has gone through some changes. So second quarter of 2013, they paid 75 cents per share, but beginning of 2015, they dropped the amount to 50 cents per share. And they remained 50 cents until second half of 2018, when they increased to 75 cents per share. So gotta keep that in mind that CVR has a history of cutting the dividend and not increasing the dividend for a few years. However, their payout ratio is 77%, so it is unlikely they will completely cut off the dividend. If you bought the CVR 1 year from today, you'll have total of 16.5% gain. Our number 6 is PacWest Bank Corp. I bought this in middle of the year in April at the price of $38.31 and now sitting on negative return. So this company does not have a good growth, but what make up for that is the dividend. So currently they pay 60 cents per share quarterly and has been paying consistently for past 10 years. But their rates for the past 6 years has been pretty slow. So fourth quarter of 2014, their dividend pay was 50 cents per share, and that didn't change until second quarter of 2018 when they finally raised to 60 cents per share. However, their pay rate has not changed even to this date from the second quarter of 2018. Fortunately, their payout ratio is at 62%, so I highly doubt that they will cut the dividend pay, but there is definitely room for increase. Lucky number 7, we have, I'm just gonna call them by their ticker symbol, which is APAM, or that's how I call them. So I bought this share back in the beginning of 2019 and in April. Their average total comes out to be $25.35, and they're sitting currently at $32.48. This is one of the serious investment company I'm keeping closer eye on because for one, their market cap is just shy of $2 billion at $1,830,000,000. So $2 billion is my minimum preference for market cap. Second, their payout ratio is 106%, which is a red flag to me. So why am I holding on to this company? Well, to be honest, when I bought this company share back in early 2019, I was not considering the market cap and the payout ratio. And as the company generally did good and paid good dividend, I decided to take a risk and see where this will take me. So far, overall, it did better than I expected, so I'm gonna hold on and see where it takes me from here. I won't go over the next two companies because I bought these out of sheer gambling and high risk, and I don't want to put wrong idea into people's head because that's not very smart. That's why I invested small amount of money too. So ignore these two companies as if they don't exist at all. So that's it for this video. Thank you for staying this late into video after hearing some boring number or exciting number depending on how you view the information. I'm planning to make weekly report and monthly report of my portfolio, and they are most likely gonna be much shorter video than this, especially the weekly report. Anyway, if you're interested in how my portfolio grow every single week, subscribe so you won't miss out on future videos. Also, super smash the like button to show support. Hope you all had a great holiday and invest wisely.